temporary spike happens, I should be able to capture that move. If I wait for the candle to close and all that, I'll never be able to capture the move because all I need is a spike. And Nifty's volatility, right? Suddenly, within 2-3 minutes, it'll give you the target and go away. So if you don't have the orders in the system, you will not be able to capture that spike. Now, those are some of the execution challenges that you have to overcome in order to do this. See, this candle is very big and there was no retracement, right? Ideally, I would want it to sort of retrace, touch this level and then break. And that is when you will get a trade here, right? Ideally. And that is a better trade because, that, there has been, a bounce and then a break, right? So ideally, even on this level break, you can trade, but, the target is one. So at least you should get one target. That should be your goal. Or if it comes back again here somewhere and then breaks, then maybe you can do the second attempt at 121. But I usually advise trading above 144, right? Waiting, because that is when, the momentum, you just need to capture a quick momentum, right? And since, the price is reacting, if it is crossing this, in that momentum itself, it will get there. You don't have to do much. So that is why it's
That
much.
searching for that 144 connected strike price, etc. I'm not still familiar, so I'm
So
just doing
see
it with
that
the quick.
at 9:07 a.m., right? You know what is Nifty's
Mm,
opening price, correct? So
mm,
immediately,
mm,
you should go and search which is your call and which is your put. That is trading not 144 but around 120, one level below. So that when the
mm.
price moves, it will cross that 144. Ideally, it should be around 120 level. 121 is the level, right? The below level. Then one
The
because 11
the
square is
option strike price we have to, the option
so
strike price we have to match with 120.
120 around that, right? So between 100 to 120, you should choose some strike. I mean, that is a subjective thing. I mean, because see, you want to
Mm,
trade on breakout of 144. So obviously it has to be trading less than 144. No, and what is a
mm.
level just below 144? 144 is what? 12 square. So what is the next
Yeah.
square? 11 square is 121 and 10 square
Mm,
is 100. So obviously it has to be
mm,
more than 100, ideally close to 121
mm,
because then you are ready to trade the breakout. Now, if you are an impulsive
mm,
trader, you can trade the morning break, but I don't usually prefer trading in the, past 15-30 minutes because I just want to
mm,
observe patiently. And because my goal is to just get one good trade a day. And usually, that comes in the second half. And, the trade hardly lasts about 8 minutes. But to get the trade, I have to
mm,
wait for 2 hours,
mm.
right? Because, the compression will form, a zone will form, so all that you have to do, right? It is a game of patience, unfortunately, right? There is no easy way to make money. So it's clear, I mean, how to read the opening. Anyways, I think this recording will be uploaded so you can again watch.
Yeah.
And
Yeah.
all these
Yeah.
concepts I'll keep repeating again and again and again till you get it. So not to worry. You can keep asking. So I also keep the VIX chart handy. You can see this is the India VIX, right? I want to see, if the VIX is spiking or, dropping because VIX has some, it is like your Vega, right? If you understand the options Greeks, this directly impacts your options premium. So for example, when the, down move happened, right, that day, the VIX would have shot up. See here, Friday, right? VIX shot up to around 20 and then VIX cooled. You're seeing it, right? So when VIX shoots up, you should not initiate a new position at that point, especially if you're a buyer. You should allow the VIX to cool down and then initiate your longs. If you want to do selling, risk defined selling, meaning stop loss defined selling, if you have the required capital, selling is equals to 2x the capital. For example, for buying, you need 1 lakh capital. For selling, I think you will need minimum 2 lakhs capital per lot. Just correct me if I'm wrong. I don't know. How much is margin required for selling one lot of Nifty?
Uh,
Around 2 lakhs, right?
I think so.
It will be
2.4
same as
something.
futures. It will be same as futures, I think. So futures is, I think, around 2.5, 2.25 lakhs. So it's better to keep around, 4.5, 5 lakhs in the account if you want to be a seller. It is perfectly fine. So, when to become a seller, when to become a buyer, when VIX is very high, then it's better to do selling, right? Because, any drop in VIX is gonna help you, right? Especially if you feel that, there is a gap down and VIX shot up, right? And you want to ride the long, then it is better to just sell puts to ride that long rather than buying calls, because it's not that you won't make money in calls, but because of the VIX crash, your premiums won't appreciate as much as your spot would tell you that it should appreciate, right? So initially there will be a drop in pressure in premium, right, due to the VIX crash. After that, when the delta takes off, the acceleration and the gamma acceleration happens. So delta and gamma is like, the analogy is like speed and acceleration. So think about like this. So if the car has to move faster, right, you will press the accelerator or not, right? So that is gamma,
Yeah.
which is a second order derivative, right? So the rate of change of speed is acceleration, right? Or rate of change of distance is speed, right? So how
Mm.
much, the price moves, the underlying moves, that is given by delta, right? But how much delta is moving, that is gamma, which means gamma is acceleration, delta is speed. Are you following me?
Mm.
I mean, if you
Mm.
understand, if you want to keep it that simple, so that means what? If the market is accelerating, right, meaning the rate of movement, right, is very high, that is where your options premium will shoot up because of the gamma acceleration.
Here you were mentioning about high weeks. Number two questions on that. One is
Yeah.
high weeks means what? What is the digital value, like somewhere around 20 or something? Or
The
another
normal
one
value
is
is, I would say, I mean, last year, if you ask me, it was around 12. This year, it's around 15, right? That is the, 16,
that's
15,
the
16 is the
average
normal.
weeks.
Yeah, for this year, because the volatility is high in
Okay.
2025, right? So normal for this year is around 16, 15 to
Okay.
16, that is the normal. Anything above 20 is abnormal, high VIX.
Okay. When it goes to high weeks, we need to think of sell put. You mean to say? Well,
You
I couldn't
see,
get that point.
either you wait for the VIX to cool down and then see what I'm saying is, if you want to initiate naked buy positions,
Mm.
it is better not to do that when the VIX is very high. Allow the market to settle down for a couple of days. Let the VIX settle down. See, VIX has settled down, right? On
Mm.
Friday itself. Now, if you initiate, it's okay. But let's say when the VIX just spiked up, right? In the
Mm.
opening of the Friday, if you would have
Mm.
bought a premium, then due to the VIX cool off, you would have lost some premium value through the day.
Mm. Mm. Mm.
Because through the day, if you looked at even the spot chart, right, there was not much movement, no, through the day. It
Mm.
was
Mm.
just the gap down and then a very slow drift up. That means there was no gamma effect,
ஆமா.
right? There
ஆமா.
was no acceleration that happened, right? There was no sharp move that happened. And
Mm.
hence, even if your spot went up, you would have observed that your option premium did not go up. You understood, right?
Mm. Mm.
That is because of the VIX crash. Because
Mm.
negative VIX is going to do what? Crash your premiums. When VIX comes down, premiums also go down. VIX goes up, premiums go up. Option premiums go up.
Yeah, that is true. What I'm trying to ask is, you mentioned about sell put. Sell put is advantageous.
In a high VIX
in-
condition,
Okay, okay.
same setup. See, the only difference is your risk. Everything is same. Okay, you're just become selling instead of buying, and you're buying. Selling one number, you're buying one number. That's all. Your risk is defined by GAN numbers only. That nothing of that change. Only the
Mm.
capital requirement doubles.
Okay.
Your profitability, everything else remains the same. But you need to have the stop losses, because, as you know, selling is comes with unlimited risk. So never do selling without a stop loss. I mean, even if for buying, it's okay to not put a stop loss sometimes. Not recommended, but definitely with selling, you should never take a chance, because one sharp this thing, move, and your premiums can move like anything. So now see, it is almost coming towards the CPR, right? As I told you, I'm not comfortable shorting the market. So I will wait for maybe, one wave to complete, and maybe if it comes here and then goes above this, then I'm comfortable taking a long. I hope I'll get an opportunity, but we are at 10 o'clock and we still have a long way to go today, right? So you have to just observe patiently. And not that you have to trade in Nifty. I mean, if you have a favorite stock, you can also analyze other stocks, right? I mean, but then, you need to be prepared, right? You can't come to the market and find stocks. The analysis has to be done yesterday, as of yesterday night. You may create your list of 2, 3 stocks based on whatever scanners, technical indicators, whatever else you follow, right? Analysis. Be ready with it, wait for the setup the next day and then trade accordingly. Any other questions so far? Has anybody taken any trade that you need help with? Seeing your comments now, you can explain your question. I did not quite follow it, perhaps. Are you here? Can you unmute and speak? Hello? Vic, are you here?
Hello.
Yes, yes, please. What is your question?
Yeah. Suppose we take this put trade, then
Okay.
the trade will be on premium, right?
Yes, so if I look at the put chart, right, this is the put we selected, no, 24,700.
Yeah.
As I said, see, there are two ways to trade this. You can either place an SLBO order on
Yeah.
this one, right?
Yeah.
At 144, and then place a limit order here, place a limit order here. So 2 lots entry, one lot exit here, one lot exit here. That is your
Correct.
trade, right?
Correct.
And then your stop loss, if you are entering here, you can actually put it here to be on the safe side. Or if you're not comfortable, you can also exit here, right?
Okay.
Because this is a swing low.
Mhm.
Ideally, you should place your stop loss exactly here,
Okay.
right?
Mhm.
So sometimes what I do is there is this technique called martingale. I mean, I can even use this level to sort of average if you have capital, that is, right? I don't ask that for beginner traders. For example, you can enter one lot here, right? And then if it comes here, you add 2 more lots.
I
So you
got
are
it.
actually entering a double, right? Or at
Doubling
least
down
one
the
more
risk.
lot. At least
Doubling
one